This week on Enterprise Security Weekly, it's episode 342. We have got the amazing Bob Ackerman from Allegis Cyber Capital is going to join us and talk about something you probably want to hear about, investing in cybersecurity startups, which is one of the most terrifying topics I could possibly bring up. Also, the Enterprise Security News will cover Carbon Black, startup failures, cybersecurity in space, human error patching, pickleball, and more, along with people who actually maybe know what's going on, Katie and Sean. Adrian's on assignment, test driving Alfa Romeos or something like that in Italy. I'm Doug White, and this is Enterprise Security Weekly.
This is a Security Weekly production for security professionals by security professionals. Please visit securityweekly.com/subscribe to subscribe to all the shows on our network.
Broadcasting live from G-Unit Studios in Rhode Island. It's the show where we talk security vendors and aren't afraid to name names. It's Enterprise Security Weekly.
All right, welcome to Enterprise Security Weekly and that cool theme that I really like because it's very 70s kind of sounding and it's sort of the mini Moog kind of thing. Well, Adrian said to tell you, this was what he wrote for me. It was like stuff I should say. He said it was National Slime Day. Oh, okay. There was no actual slime. I thought it was a setup for sure. He was like, it was like on he sent me. He was like, be sure and mention National Slime Day, and I was like, I'm going to say that, and it's going to be bad, right? But he didn't reply. So anyway, I guess they run this show differently than I run my shows because there would definitely have been slime if I was running this place. But old Gil's going to make some changes around here, let me tell you. Well, it's episode 342. It was recorded on Thursday, the 7th of December. Joining me are Katie Teitler-Santullo, and Sean Metcalf. Hi, everyone. And
hello.
Hi. Good to see you. Yeah, no slime today, but you know what, Doug? Some of the people listening and watching aren't going to get that reference. I'm sorry. It's sad for us, but it is what it is.
Yeah, I mean, I'm surprised I get that reference, but I don't know. I don't even know why I was thinking that, but then I was like, what is that from? And then I figured it out. Yeah, I'm way too old for that. Yeah, so, yeah. Hi, Sean.
Hey, how's it going? Yeah, I think anyone who's listening who doesn't get the slime reference, go ahead and go to your search engine of choice and type in slime and Nickelodeon, and that will give you.
Oh yeah, that would give you the
to.
idea. Yeah, I think.
Yeah,
so.
if you want that spoiler there, doing good. Things have been busy. Been traveling for work the past few weeks, and we just actually launched our first security product yesterday. So it's been a very hectic time. So helping to try to figure out how to solve the Active Directory security issue for organizations. So pretty exciting, and it's been quite the past few weeks.
And actually traveling for work. We were talking about that yesterday at the holiday thing. I was like, none of us are traveling. All my clients now, when they call, they're like, could we have a meeting? Like, sure, I can get Phoenix, and they're like, no, I'll just do it on Zoom. And it's like, oh, okay, well, all right. Whatever.
I was actually in Warsaw, Poland just a couple weeks ago, the week before Thanksgiving, working with a customer out there. So that was really great. It was cold, but it was great. The food was delicious.
I love Poland.
The drinks were good. Yeah, absolutely. Yeah. And before that, was out at several conferences, and last week meeting up with the crew in Missouri that are actually setting up a Missouri Center for Cybersecurity, which is actually a really cool idea out of Springfield, Missouri. So Shannon McMurtry and his team is setting up this cyber center where they can have college students go and work there, effectively be paid interns to learn practical application of cybersecurity knowledge for companies that are need these services. And so it's a really cool idea. So it's opening up in the new year. So we've been talking with them about it, and there's a bunch of other companies that are involved in helping to get this thing off the ground. So it sounds like a really cool idea, and it was great to be able to meet with him and actually tour it as well. So hi, Shannon.
Well, yeah, I love Poland, and I go to Wrocław sometime. I know, I'm sorry, Polish friends, I can't say it, but that's like one of those places I went and had to do a presentation, and I'd never been there, and it was like really, really cool. And of course, you're going to go skiing at Zakopane and all that fun stuff. So yeah, I like Poland.
Sounds amazing.
Yeah, it's great, and it's a cool place. Be sure and join our Discord channel to chat with our host if you'd like, ask questions, customize live stream alerts, and more. Be sure and visit securityweekly.com/Discord to receive an invite. Ooh, fancy. They have invites and everything here. Oh, cool. I feel like I should have worn a tux or something. All right. Well, in our first segment today is a topic that, well, maybe that, we should certainly talk about. And it's something that's been around forever, but I mean, it's kind of come up again. Investing in cybersecurity startups. We're very fortunate to have Bob Ackerman, who's the founder and managing director of Allegis Cyber Capital, with us today. And in addition to founding Allegis Cyber Capital, Bob is the co-founder of the Cybersecurity Foundry Data Tribe, the co-founder of Cyber GRX, and the chairman of the Global Cyber Innovation Summit. Hi, Bob.
Hey, it's good to be with you guys.
Yeah, it's great to have you here. I know, the first time I got involved in like startup investing, it wasn't cyber, but it was like tech startups back in the late 90s. And I had this friend who was always into weird investing things. And, it was a quite interesting thing, but I do love it when we get to have somebody on I can ask all my questions to for free, which is really great. So one of the things I wanted to talk about first with you was a little bit about getting started in startup investing. I think there's tons of people out there who maybe want to invest in things, and it's not the same thing as buying 10 shares of IBM, and it's certainly not the same thing as buying 10 shares of a mutual fund or something like that from a brokerage house. And, today, while we can't eavesdrop on Gerald Loeb smoking a Lucky in the next booth at the Hourglass, my wife said nobody would get that reference, and probably nobody will, but that's okay. So how do people get into this?
Well, look, I think, starting to invest covers a kind of a broad range of sins. And when you talk about cybersecurity in particular, I think cyber is a little more difficult than some other areas of technology, and really driven by the fact that it is technically complex. It moves very, very quickly. And I think, quite frankly, you have to have a baseline knowledge of the technology in the marketplace before you should really think about deploying capital into cybersecurity startups. Cybersecurity at one level is an incredibly attractive market opportunity just because the expense associated with cyber threats continues to increase and accelerate. As a result, spending to defend against those threats continues to increase and accelerate. So from a macro perspective, there's a pretty compelling argument. Cyber is one of those areas where investing in cyber defense is really not optional. It's not one of the things you get to put off to next year, because the consequences of getting it wrong can be catastrophic. At the same time, it is incredibly complex. And you really need to be able to step into this environment, understanding, what is an okay idea, what is a good idea, what is a great idea, what is a game-changing idea, and to be able to parse between, what is roughly today 6,000 private cybersecurity companies, which ones are investable and which ones are, past their prime or they're not ready in the market yet. So. From my perspective, our firm, Allegis, was the first dedicated cyber venture firm in the world to the first dedicated cyber venture funds. And while we've been doing cyber for 23 years, and we made that transition full-time to cyber about 12 years ago, it was really driven by the fact that you've got to understand the ecosystem. You have to be able to anticipate how threats will evolve, where the new threats are likely to occur. If you're going to have any chance at investing. Otherwise, you're simply reacting to ideas, and it's much like playing darts. Like, one of the things that makes cyber, very, very different from a lot of other areas of technology is that in cyber, there's an active offense. There are bad guys that get up every day. They're technically sophisticated. They're unconstrained in their behavior. They're highly motivated. And they wake up with one objective, which is to compromise systems to achieve whatever their nefarious goals and objectives are. So you've got an offense that actually drives innovation. And when you start talking about defensive countermeasures to those offensive innovations, you really need to understand that ecosystem. And you need to, frankly, be able to anticipate where the offense is likely to be if you really want to build compelling solutions. If you're not building compelling solutions, all you're doing really is reacting to demonstrated cyber threats. And you're going to be a day late and a dollar short. And the chances of being a day late and a dollar short and making a significantly profitable investment are pretty low.
Yeah, and I think there's a whole issue of like predicting liabilities. I mean, because those are going to affect valuation, right? I mean, if a firm says I'm going to come up with a solution, and that solution doesn't work the way they expected, or even if the marketplace changes or shifts before it gets to market, that could really have a huge impact on a product if there's just these unforeseen things.
Absolutely. And, it's, one of the things you think about, so much of the cyber defense industry, which obviously is significant today, is in response to demonstrated cyber threats. And that's important. There's no two ways about it. But what really, frankly, gets my juices going is being able to anticipate what the next generation of threats are going to look like. So let's take an area, artificial intelligence. We all talk about artificial intelligence when you apply it to cybersecurity. It's a very interesting conversation. Most of the time, the conversation is focused on, well, how do we boost the productivity of SOC analysts? How do we use artificial intelligence to close the skills gap that's in the marketplace? That's all really important stuff. But what's more interesting is, how does artificial intelligence change the nature of offensive threats? And how do we develop defensive countermeasures to the application of artificial intelligence to cyber threats? Much more interesting. But again, you get into the weeds pretty deeply, and you have to have a pretty solid technical foundation, to be able to understand, where is the heat going to be? One of the things for us in our investing activities, whether it's at Allegis Cyber or at Data Tribe, is quite frankly, I don't invest in teams that haven't spent all or the bulk of their career in cybersecurity. And it's not being, arrogant. It's a matter of the fact that how fast can people learn? And cyber moving at the velocity that does, it's very, very difficult to get up to speed from a standing start and be competitive. There has to be a baseline of experience and knowledge, both from a technical perspective and from a market perspective, that really is kind of a precondition to having a reasonable chance at starting a cyber company and having a reasonable shot at success.
Yeah, I like that word velocity, because I remember back in the 90s and we were looking at, and I worked for a couple of these too. There was this huge, boom of small company startups in tech, and same thing. I mean, really, you went and looked at those, and sometimes we would go in and sort of take a look at them. And when I would see their team was made up of people that didn't have deep background in that space, they're just like, oh, there's an opportunity, let's jump on it. We're going to do this or do that. I really got nervous about those companies a lot, because maybe they would, and I mean, I remember this guy telling me once, he was like, hey, well, it wasn't Facebook. It was, he's like, IBM was a startup once, and I'm like, yeah, a long time ago. And it was just such a competitive space. Do you think that cyberspace, and I think I know the answer to this, but maybe some of the viewers, how competitive is that space? So when an idea pops up, like say AI, how many people jump into that pool just right away?
Well, look, it's changed quite a bit over the last, like I said, I've been investing in cyber for 23 years at this point in time. And you go back 23 years ago, people just thought I was paranoid. They kind of look at you a little odd. My point was, I am paranoid. You should be paranoid too. Well, I think as the market has grown, as the budgets have increased, as the capital deployed to build effective cyber defense has increased, it's become one of those areas that's perceived to be hot, where there's a lot of momentum. And what happens in that environment is it attracts entrepreneurs. Entrepreneurs are looking to hitch their wagon to the momentum. But as I've cautioned a lot of people, it's like, when an entrepreneur and a venture capitalist, meet at the bank to talk about a market neither of them are experienced in, there's no good news there. It's how you end up with a lot of undifferentiated Me Too companies. You look at threat intelligence as an example. By my count, there's 107 threat intelligence companies in cybersecurity. How many do we need? Yeah, 5 will probably get us there. How do you account for the other 102? Momentum. People wanting to get into cyber, wanting to participate in the rapid expansion of that market, not really able to articulate clear, value-driven differentiation between what's already in the market and what they're bringing to the market. And so, you end up with an overcapitalized market in sectors. In environments like we're living through today, that all gets flushed out. I get asked the question all the time: Is cyber overcapitalized or undercapitalized? My answer is yes. So, well, which is it? It's both. The Me Too undifferentiated commodity stuff, grossly overcapitalized. And I throw, again, threat intelligence out as an example. When you talk about what's really going to move the needle going forward, those sectors are grossly undercapitalized. Why? Because they're on the very cutting edge of technology. Very few people have the expertise to tackle those problems. They are not yet obvious in terms of problems, but they will become obvious. I'll give you an example. We have a company in our portfolio by the name of Dragos. Dragos is an industrial control security company. We actually started that company about 7 years ago at Data Tribe. So we pulled, as we do at Data Tribe, we pulled 3 guys out of the National Security Agency. They were core to the NSA's offensive industrial cyber team. And a big part of our playbook at Data Tribe is taking offensive teams and leveraging their domain expertise to build defensive countermeasures. At the time that we started that company, we had seen offensive activity in and around industrial systems beginning to tick up. And our projection was that, in 4 to 6 years, we're going to see a significant expansion of cyber threats in and around industrial control systems, which in fact has turned out to be the case. But the conventional wisdom at the time that we started that company, even within the core venture community that really are, what I would consider to be peers that understand cyber, they've all got 15 to 20 years in cybersecurity. Even the conventional wisdom within that group was, Bob, there's no industrial security marketplace. You're doing something in Maryland. Industrial moves too slow. Nobody's ever made money in industrial. And my point was, cyber is going to change everything you thought you knew about industrial. And, the question that I got from, and again, these are sophisticated investors that really know the domain. They'd say, well, how are you so certain? I said, you guys know my playbook. I've looked at the world through an offensive lens. I want to know where the offense is going, because where the offense is going is going to tell me where the defense needs to be. And if you look at sort of life cycles of cyber innovation, things start off on the offensive side of the equation, and there's a lag of somewhere between 4 and 6 years, plus or minus, between the time that those cutting edge offensive techniques are developed, and they basically escape containment and become broadstream, and then effectively get unleashed on the broader domain. And so in the case of Dragos, that turned out to be exactly the case. Today, we have a company that is the acknowledged leader in industrial control system security with a multi-billion-dollar valuation. But we didn't wait for that market to be obvious. We were able to anticipate where the puck would be and engineer a defensive solution to where we thought the puck would be. And I think, I'm going back to, that requires a level of domain expertise, both from a technical perspective and a market perspective, to be able to make those calls and make those investments.
Yeah. So, I think a lot of what you said is really, some of it is just investing. Regardless of the region, it's like you have to have that expertise, whether you're investing in oil and gas or you're investing in new things or whatever. Do you think that people that are trying to get started should have like a buy and hold, or they should be like I remember my dad told me that, and I wish he hadn't, but back in like 1959, he bought 500 shares of Holiday Inn, and and his friend gave him a tip and he bought it, and he had this sort of, get out point, it's like, when it gets here, I'm out. And he did, he like went up 1962, he sold it all. And I'm going, wow, I wouldn't be here today. I'd be living on your private island, right, Dad, if you'd held that stock till to the current age. So, are those viable strategies to buy and hold these things, or is this something you really need to get in, set your profit, and get out?
Look, I think this market, again, it moves very, very quickly, and it evolves very quickly. And so you have to be very agile, which means knowing what to get into, when to get into it, but equally important, knowing when to get out. There are areas of technology innovation in and around cyber that have their day, but then that day is eclipsed by, a new threat or consolidation in the marketplace. So, the vast majority of cyber companies are not going to be public companies. They're going to be acquired. And so understanding the macro environment as it relates to cyber to know, do we play long or do we take money off the table? One of the things that's interesting, there's a lot in common between cyber and life sciences. Number one, I can't imagine anybody in their right mind who would invest in life sciences if they didn't understand the science really, really well. Otherwise, you're just setting yourself up. I think the same thing applies to cyber. But it goes beyond that to how does the market economy operate? If you look at life sciences today, what you find is young, very innovative companies doing cutting edge research. They get through their phase 1 and their phase 2 clinical trials. And when they're approaching kind of phase 3 clinical trials, what tends to happen is they get acquired by big pharma. And big pharma then leverages their very strong balance sheets, their phase 3 clinical trial capabilities, their distribution channels, and their brands to take that technology the rest of the way to the marketplace. Same thing happens in cyber. Basically all big tech companies want to be in cyber. Why? Because it's a growth opportunity. It's a massive growth opportunity. But they don't have either the technical expertise or they don't have the culture that allows them to innovate at a pace that's consistent with how fast the cyber market operates. So what do? They sit back and they basically use what I call the innovation ecosystem, the startup community, as their lab. And they look at companies that kind of get through the development, they get validation of that development in the marketplace, they demonstrate some commercial traction, then they'll step in and acquire those companies, bring it in, put their brand on it, and roll it out through their distribution channels to their customers. And so there's a market cadence in and around cyber companies that you have to pay attention to. You can't simply say, I've got a great idea and I'm riding this one all the way, to an IPO, because frankly, very few companies will make it to an IPO. The vast majority will be acquired. And you have to understand the market dynamics to understand, when are you at a local maximum? When is the time to sell? And that's a combination of the particular company, the competitive landscape, what is big tech doing? And what you don't want to be is the last standalone company when 3 acquisitions in your space have been made by 3 big tech companies, because now there's an asymmetry in the competitive environment you're operating in, and it's going to become very, very difficult to compete. So there's a timing issue in cyber. And I think if you don't understand the market really well, it's much harder to get the timing aspect right.
Yeah, I mean, there was a big story in the New York Times today that I got in a news show that was about unicorns becoming zombies. And they weren't really talking about cyber as much as they were talking about tech in general. And particularly, it looked like they were talking about gig tech, because they were talking about companies like WeWork and stuff like that. Yeah. And how, they've been partying like it's 1929, but it's 1929. And, there inevitably are shakeouts in these industries when that graph starts to unravel and you see all these people falling by the wayside. And yeah, I agree that the threads that get grabbed by the big players with the money to promote those products are the threads that are going to persist in some of these, unless it's just a completely unique idea.
Yeah, I think what you look for, when you're looking for unique ideas, you're looking for entirely new sectors that are going to be high growth sectors that are looking for a leader. That will sustain an IPO. Short of that, you look at areas, you were talking about kind of in the opening up, you talk a little about Carbon Black, which great company, but we end up out there with, a dozen plus endpoint security companies. How many do we need?
Right.
Right. And at some point in time, the sector is overcapitalized. Companies are basically all doing the same thing, very little differentiation, and it becomes a race to the bottom. So you have to understand the cycle of innovation, which starts off with, innovation. If that innovation is successful, it will lead to emulation. Emulation inevitably will lead to componentization and commoditization. And that really is the cycle of tech innovation. You need to understand, where are you in that cycle? And again, it comes back to, when do I invest and when do I take money off the table? And it will have nothing to do with technology. It'll have everything to do with the macro environment in which that technology is competing.
I completely agree. I mean, I think if you want to study that, at home, looking back at healthcare is a great example. Technology is a great example of industries that suddenly, came up and started and initially had lots and lots of startups. And today they're big blue chip companies and things like that are still out there. I do want to make sure Katie and Sean, if you have questions or you want to comment on any of this, I don't want to exclude you.
Yeah, absolutely. Thanks. So, Bob, you just mentioned something I think is pretty important, is the cycle of it from innovation to componentization. And I think that's something we've seen a lot, where companies come up with this amazing idea, like this really great component, and then at a certain point, all the companies that are out there, all the customers out there looking for something, they say, okay, well, EDR has to have this thing because they have it. And then all the other companies rush to have that. So then everyone can check that box in the comparison chart. And then in the Gartner and other industry analyst type things, same sort of thing. Okay, can they do this? Yes or no? And then it's a matter of the customer figuring out, okay, they say they do this, but do they do this well or not? How do you think a company can better differentiate within that checkbox to really ensure that customers know that they are doing something that's innovative? Is it as simple as going, we were the ones that brought this to market and others have kind of been following along? Or what do you think about that?
Well, look, I think the problem is that, you have, and look, this is the innovation economy more broadly read, are the fast followers. And you can be the pioneer, you can do all the heavy lifting, you can be the one that basically, mows that field for the first time, but people will see what you're doing. And they will figure out what your differentiation is. They will begin to use your rhetoric to make it very difficult to differentiate. So you have to really stay ahead of the herd. And the challenge is, how do you stay ahead of the herd when the herd's on your heels? And the only way you're going to be able to do that is to really be, in intimate touch with the problem set that the customer is dealing with. I do a bi-monthly, I do a webinar series for cybersecurity CEOs. We bring in experts and we kind of talk about, their journey and what they've learned along the way. And, Rob Lee, who's the founder, co-founder and CEO of Dragos, talked about his go-to-market motion. And he said, everybody gets out there and talks about their product and what their product will do. He says, what I've learned is align yourself with your customer's problem, because your customer really isn't looking to buy your technology. The customer is looking to solve their problem. And if you can align with the customer's problem, that's where the budget is. And those are the suppliers that are going to win. I think it was really, really good advice. But you also need to understand that, you go back to endpoint security, when you've got a dozen competitors who are basically all doing the same thing, who are spending massive amounts of money to try and climb above the noise in the market, you probably want to be thinking, unless you've got a breakout strategy to put distance between yourself and those competitors, and you got to be very honest with yourself about that. Because there's always kind of a local maximum in terms of what I call terminal value is. You got to be very honest. Otherwise, you end up pouring more and more money into a proposition that becomes more and more marginalized. And at that point in time, you want to be, you probably want to be taking your chips off the table and find a good home where you can become part of one of big tech's platforms and integrate with the other components that they've got on the table, and they're going to take that into the marketplace. Personally, I tend to operate on the bleeding edge of technology. That offense to defense perspective is a big part of how I view the market. Understanding where the offense is taking us, and then in anticipation of that, leveraging offensive expertise to build defensive countermeasures and to be the clear leader in new sectors as they develop and evolve.
Yeah, absolutely. And so along those lines, you're talking about when there are a dozen or more, say, EDR vendors out there, at a certain point, they're all kind of competing on capabilities, as you said, the things that differentiate them the most from the others. And at the end of the day, price to a certain extent as well. So there's certain vendors out there that in one space, they're way more expensive than others. And then the customer has to determine if they're worth that additional cost. So everyone's been talking about AI, and certainly AI has been really hot. You mentioned how you really want to look at what's leading and pushing in the offensive side, and those are the things that you look at the most. But what are the areas that you're most excited about when it comes to investing in cybersecurity companies? Maybe the things that aren't really being mentioned or focused on that you think are trending in a good direction for investing and certainly for products.
Yeah, I think there's a couple of things. First of all, I think cyber is on the cusp of growing up. Where are we in the development of the cyber market? We're still in the relatively early innings, if we want to use baseball metaphors. But I think there's a number of things that capture my attention. Number one, when you look at artificial intelligence, I tend to focus on what are the defensive countermeasures to weaponize artificial intelligence. That's going to be a big issue. We don't really talk about that. We don't have much in the way of defensive countermeasures today. And the implications for that, at the Global Cyber Innovation Summit, which I have the pleasure of chairing, we had a conversation a couple of years ago, and we talked about the breach at the Office of Personnel Management. And that OPM breach, represented the compromise of 23.5 million highly classified HR records from the U.S. government. And that campaign took place over about 9 months. And the speaker in this particular case was a senior from the National Security Agency. And he was using that to illustrate this offensive threat of AI. And his point was that was a campaign that took place over 9 months. When you start deploying artificial intelligence in an attack campaign like that, it's not 9 months, it's not 9 weeks, it's not 9 days, it's 9 hours. It happens and it's done and it's over before you have any idea what's happened. We don't have defensive countermeasures to deal with things like that today. So I think I spent a lot of time about that. I spent time thinking about the weaponization of data. The adversary never stops, right? The adversary gets up every day. They're very creative. They're unconstrained in their behavior. And I expect we're going to see data weaponized. Now, how do we detect weaponized data? In a global digital economy where that economy is data-driven, the veracity and our confidence in the veracity of that data is absolutely essential. If we get to a place where we can't trust the data, or we don't know what part of the data we can trust, basically our automation, our data-driven economy begins to shut down. So I think a lot about how are we going to detect and manage those kinds of problems? And it takes you into areas like data provenance. I fundamentally believe that most cybersecurity problems at the end of the day will reveal themselves to be data science problems. Yeah. And so it's just part of how I view the world. But that's an area I spend a lot of time thinking about. I think about management. Of cybersecurity. The fact that, Phil Venables, when he was at Goldman Sachs, developed a concept called continuous controls monitoring. And I think Phil was way ahead of his time, and he's right on the money in terms of where this market wants to go, which is we've got, dozens to 100 plus tools in large financial organizations that create all sorts of data about our cyber posture, the effectiveness of our cyber tools, what our defensive environment looks like. And, these data sets are basically, all in stovepipes. Every so often, somebody runs an Excel spreadsheet exercise to pull that data, integrate it, to give them kind of an integrated holistic view of their cyber posture. Well, there's a whole bunch of problems with that. Number one, the moment you said save on that Excel spreadsheet, the data is out of date. And so we are managing by anecdotes, and the anecdote is not actually tied back to accurate ground truth. And that's a problem. And that's a problem not only in terms of how we manage cyber within an enterprise, it's a problem that's going to reveal itself as we respond to a greater level of regulatory oversight as it relates to cyber risk and exposure. It creeps up when we start talking about cyber insurance. And so, one of the areas that I spend a lot of time thinking about is how do we get ground truth? How do we take the data sets that we have, integrate them into a holistic view of my cyber posture so I can begin to say, here's where I'm covered, here's where I'm uncovered, here's where I'm inadequately covered, here's where I need to invest, here's where I was, here's where I plan to get to. I begin to manage and make decisions and allocate resources based on data as opposed to anecdote. And I can use that same data set to communicate across the C-suite. I can use it to have a conversation at the board level. When I say, look, I need another $15 million in the budget, what am I going to get for the $15 million? Well, it's going to take us from point A to point B. Or here's where we were, and here's where we are, and here's where we're going. You now begin to have a much more intelligent conversation about your cyber risk, and the threats to the digital substrate upon which the enterprise manages. And that's going to serve management. It's going to be responsive to the regulatory environment. It's going to be responsive to, risk arbitration and things like cybersecurity. So that's another area that I spend a lot of time thinking about. These are the things I think about. There's a lot of stuff going on in the threat intelligence world that's beyond threat intelligence. One of the things we're going to have to deal with the fact that, you look at network mapping today. People spend a massive amount of money on network mapping, and it makes sense. I can't secure what I can't identify. And best case today, people will tell you they get maybe 50% visibility into their network, and they just hope to see in the right 50%. Well, who thinks that is adequate? And they spend massive amounts of money to get there. And so we need to get to a place where we've got 100% visibility into our estate. There's a new technology called computational mapping that concept originated at the National Security Agency and then led to a research paper and a research project at UC Berkeley. A young PhD by the name of Dr. Austin Murdoch developed this technology. And what computational mapping does is it basically gives you a 100% accurate view of your network posture, including phantom IT. So you see it all. And in the process, it will also reveal where you're vulnerable, where you're open, where you're misconfigured. And that lays the foundation to begin automating the process of managing network configuration. Now, that's going to become it's critical today because we don't have that capability, but it becomes more important as we start looking at increasingly automated attacks, which are going to require automated defenses. And so these are the areas where I tend to spend a lot of time. That company, Dr. Murdoch's company, is 6map, and that was actually a project that began at Data Tribe as well. But I'm looking at things that are based on 20 plus years in this space of being able to anticipate where the adversary is likely to go, where the vulnerabilities are going to be, what are the consequences of those vulnerabilities, and what are we going to do about it. Now, against that backdrop, you have to think about the fact that, a large financial institution may have 100 plus vendors. They're playing the role of the integrator. They don't want to be in the integration business. They're in the integration business because they have no choice. But the greater the number of bit parts in that stack consumes resources in the integration, which takes away from other things those resources might do, and actually increases the risk posture. And so you have this massive move towards vendor consolidation, which I think is something that is clearly going on and is going to have a significant ramifications for the 6,000 plus cybersecurity companies that are offering solutions into the marketplace. But that vendor consolidation doesn't mean we're going to go from 6,000 to 100 vendors. What it means is that the Me Too commodity stuff is going to get commoditized. It's going to get integrated into integrated solutions. And what that's going to do, it's going to free up resource on the part of that enterprise customer to identify and challenge the next generation of cyber threats. And so there's this ongoing rationalization of the marketplace that will continue for the foreseeable future, where what was cutting edge innovation today eventually becomes componentized and commoditized. You want to drive those costs down. You want to buy those pieces of technology solution as integrated solutions so you can redeploy your resources, whether it's human capital or cash, into the next generation of emerging threats. And so I think that's another area where you need to spend a lot of time thinking about what's going on in the market.
Do you think that integrity area, I mean, when you were talking about that, I certainly am familiar with the confidentiality piece of it. I've gotten off planes in Beijing and thought about that OPM and the OMB hacks and going, I wonder if they know I used to have a top secret clearance, and that's a little scary. But the integrity thing was really interesting to me when you brought that up, because that seems like that would be a really growing area, because the value of data is going to have to be sort of tempered by the confidence that you have that that data is valid and that it's not being weaponized against you or weaponized against someone else, because they could easily see people trying to weaponize, this is like, there used to be this old gag that a long time ago where people would sign people up for things online, or not online, but like, paper forms, or subscribe to magazines you knew would bother them a lot if they were subscribing. And I could see that kind of weaponization happening with nation states and things like that, saying, you know, we want to compromise this individual, we're going to weaponize integrity of data, and we can do that through the DMV, or we can do that through this. Well, I mean, do you think that's like going to be a big, I've never even thought about that pipe before, but now I'm thinking about it a lot.
Well, if you go back to OPM, right, there was actually a series of breaches that took place around OPM, largely attributed to the Chinese, which was about, you know, a mashup of data sets to build profiles of individuals that they might want to target. And it included, you know, medical information. It included things like, you know, classified documents from OPM. It included travel history. You know, you've seen the 23andMe report now that effectively all of their DNA data of customer data was compromised. So all that data gets, you know, mashed up and integrated to achieve whatever broad range nefarious objective a bad actor has. So you have that issue, but it also takes you over to the other side when you start talking about, you know, deep fakes. You know, which is going to bring me back to data provenance. How do you trust the data in a data-driven economy? How do you trust the data? You know, who touched that data? Where did it come from? What was changed? What is my confidence level? When you're running these highly automated systems, if you don't have total confidence in that data, you know, you've got a problem. You basically lose the advantage of your automation. And, you know, and you don't have to corrupt all the data. You've talked to my friends in the intelligence community, I'll say, just have to corrupt enough of the data that people lose confidence in the systems. And so, again, this becomes, you know, an information science problem. And I think we're going to get to a place in time where provenance of the data is going to become part of the data structure. And it's going to be absolutely essential. You know, we don't spend nearly enough time in this country thinking about data privacy. You know, and, you know, at this point in time, you can make an argument that all the horses are out of the barn and it's way too late. I think the Europeans have actually paid a lot more attention to it than we have. And I think good for them, not so good for us. I think there are things that we can still do. But that's also going to begin to usher in things like homomorphic encryption, the ability to take data, which could be abused or misused, encrypt that data, and through homomorphic encryption, allow people to use the data without actually seeing the underlying data. That's an area where I would expect, these are generally called privacy-enhancing technologies. It's an area where I would expect to see a lot of activity going forward. Phenomenally complex, you know, really, really hard, very tough math, but areas that are going to be fundamentally essential to how we manage data going forward in a global digital economy.
And that almost seems like that starts to leak over into that integrity guarantee and integrity scoring to be able to say that. Because I remember doing a speech, like, I don't know, a long time ago, where somebody asked me to talk to some financial people about hacks. And one of the things I was talking about was the chaos that would ensue if somebody just compromised the stock ticker. You know, I mean, I'm not even talking about some kind of deep dive. I'm just talking about the fact that the stock ticker suddenly flashes gotcha and, you know, NYSE shuts down for, you know, 37 seconds. The fallout from that is just immeasurable. But if people became doubtful that they could trust data they were receiving, like deep fakes or students faking transcripts and things like that, it just gets terrifying really, really quick. I think there's a lot of space there that's going to have to be explored in the next few years.
Yeah, and so, you know, so for me, we'll go back to kind of the investing thesis, right? Do you spend more time coming up with a marginally better threat intelligence solution, or do you tackle these green fields, which have so much opportunity for abuse and misuse? You know, our focus is going to be on those green fields and understanding how the threat environment is evolving, the nature of the evolving threats, and what can we do to counter those threats.
Katie, did you have anything you wanted to get in here?
I did. We only have 1 minute, so maybe just a quick comment on funding, because you've talked a lot about it. Obviously, have a lot of experience, background, perspective. But one thing that we've been looking at over here, of course, is startup funding and how it sort of comes in bulks. So these days, any company with AI even mentioned in its pitch seems to be getting funded, and other companies are having a harder time. Do you think that, to an extent, a certain portion of the banking VC angel funding community is broken in that way? I mean, in a way that they're chasing what they think will get them good returns versus what the perspective you seem to have, which is long-term investments and sustainability.
Yeah, Katie, look, I think it's an issue, and it's not a security issue. It's a venture issue. I sometimes refer to the venture community as the visionary sheep. And again, there's a perception about what is an area of innovation that's going to change the game, and moths to a flame, right? The capital crowds to those areas. And look, short term, my observation, having been in the venture business for 25 plus years, short term, we tend to underestimate, or we tend to overestimate the impact of technical innovation, and long term, we underestimate. And so use AI as a classic example, is just the most current one, where all of a sudden, every deck that 18 months ago was a standard cybersecurity deck now has a slide about artificial intelligence in it. What are they doing? They're basically marketing to the capital. What does the capital want to do? The capital wants to hear about artificial intelligence, whether it makes sense or not, whether they have any skills, whether it delivers value. A whole lot of questions. You've seen incredible valuations placed on companies with no revenue. You've seen corporate investors stepping in and buying startups for significant, 9-figure numbers with no revenue because they don't want to be left out. There's going to be a whole lot of money that gets lost near term in artificial intelligence. Long term, there's going to be a whole lot of money made. But it's the understanding, and the problem, one of my criticisms of the venture community is that, too many people in the venture community today are generalists without technical backgrounds, and it makes it harder to kind of sort the wheat from the chaff. And when you're writing checks in an environment that's driven by hype and a lot of momentum, and you have a hard time sorting the wheat from the chaff, there's going to be some disappointment, and there's going to be a lot of money lost. Now, there's going to be a lot of money made, and the rationale will always be, well, we're going to be one of the ones that make money, not one of the ones that loses money. Time will sort that out. But I think venture once upon a time had a much deeper technical foundation, and a deeper operating foundation. I think that as the venture ecosystem has grown, as more capital has come in, we've lost some of that technical foundation, and we certainly have lost that operating foundation. And I think it creates an environment where the volatility can be heightened, higher highs and lower lows.
All right. Well, thank you, Bob Ackerman from Allegis Cyber Capital. I think that's a show that we could have maybe let go for another hour or two, and we would have been fine, maybe a couple of days even. But thank you for joining us on Enterprise Security Weekly today. I really enjoyed that. So stay tuned. We'll be right back after I run over here and buy some shares in AIoverlords.com. And we'll be back with the weekly Enterprise news.
Thanks, guys.